Welcome and hello, everybody, to our session today on the Tax Agent Services Act changes, what you need to know, brought to you live by Tax Nuggets Academy. Hello, I'm Joyce, and I'll be your host for today. Welcome back to our subscribers, Tax Nuggeteers. Thank you for joining us today. If this is your first time event with us, welcome, and it's good to have you with us. As usual, the chats are open. Feel free to say hi so you engage with each other, engage with myself and the instructor as well. And let us know where you're joining from. I'm here in sunny Melbourne. Yes, it is sunny finally today. And if you have a question for the instructor, please put it into the Q&A section, which is separate from the chat so that I can look out for it and get back to you. Also, this session is being recorded and replays are available for VIP and team subscribers. For those that are new to us, we are a tax training platform for accountants from sole practitioners all the way to top tier accounting firms. We're a subscription-based platform, all you can eat, just like Netflix. So we run about a dozen live events a month, and you pay one monthly fee and you get unlimited access to everything, which is like our live events, replays, monthly tech updates, special topics, and even our programs. So we've got a superannuation fundamentals program that's starting next month on the 19th of September. Head to taxnuggetsacademy.com.au to check us out. So that's our marketing spiel. Time to introduce our superstar instructor today. She is the principal of Perigee Advisors, specializing in private groups, and is a very well-known presenter for various professional bodies, such as the IPA, and is a lecturer for several universities. Please put your emoji hands to give a very warm welcome to Lisa Gregg. Hello.
Joyce, welcome, welcome, welcome. Hello to everyone.
Very controversial topic today, Lisa.
Oh, I've got a lot of angst about it, Joyce. You know that. We've had a bit of a discussion about it because normally what I try and do with these sessions is give as much of the real world as I can to them. But unfortunately, this is going to be a bit of a, was it fortunate or unfortunate, an awareness exercise, because it's impossible to provide any real answers or solutions because it's just been very broad. The legislation's been very broad. So we might have to do a bit of a wait and see, but let's see how we go with it anyway. It's going to give definitely people know where the line in the sand is of what we need to know.
Yeah. All right. So exactly what are we covering? Quite a few things.
Okay, so I thought we'd take us on the journey of how we got here in the first place.
Look, how do we end up in this mess?
Yeah, how do we end up in this mess? And it's been a very emotive topic. Anyone who's been on the socials know that it's all been uproar. It's hit even television media and things like that. So let's take us on the journey of how we got there, Joyce. And I thought it was really good to know. And then we'll get into one of the big things that came through, which is the breach reporting. Then what we're really talking about with this August update is the legislative instrument that came through. And then I've sort of looked at and said, well, how can this sort of work? What are they trying to get at? So we're going to have a little bit of a discussion about this nudge thing that legislators do. And then I'll give you a little short top couple of tips of what we need to do next and what we need to keep aware of. So I think that's
because it impacts you directly. Yeah, Lisa, because you are a tax agent.
Exactly. And that's why I had angst of what I want to say and what I can't say and what I can say in the public domain, which has got to take out the expletives a little bit, Joyce, because we're all a little bit frustrated with it. You know, the TPB had a webinar on this subject and it exploded their platform. More than 5,000 practitioners joined. So you couldn't even get in. So it is really, it's one of these topics that everyone's gone, what is going on? So that's what we thought we'd try and sort of work out with it all.
Amazing. Let's get cracking.
So let's have a look. So this was my first slide to kick off where we're at. You know, we're in the system that's highly regulated. We've got to know the rules that we're playing in. In respect of Zero to Mini Hero that Vicky and I run for Nuggets, I thought I'd put Homer in there because we use Homer as the case study. So is it the sky is falling? Is the end is nigh? Who knows? My message is keep calm and carry on. And there's my little emoji off my phone that says, let's just sing Kumbaya, right? Because really, it's been an omni-shambles. If we want to quote Justice Lee, it has really been an omni-shambles. And why have we got there in the first place? Because I'm thinking, are we just very, very tired and exhausted? And as a practitioner, I think about what have I had to deal with that is beyond just the nitty-gritty of the tax law. You know, we're not talking about Section 100A or Div 7A or anything else. We're talking about what has been the administrative pain in the proverbial that we've had to go through. And I'm thinking, we've had to live through single touch payroll. Then we had this little thing called COVID, where everyone knew JobKeeper cash flow boost, and we had to deal with that. And then we had this little thing called director identification numbers, where we had to have all our clients get one of those. Now, where does that number go? That's just gone into oblivion because the modern business reporting's gone away. And then we've been up and under with this client agent linking as well. And now we seem to be hit with all this ethics stuff and dobbing each other in and that sort of thing. So I think that's why this has got so emotive. Maybe it's the straw that broke the camel's back, Joyce, is the way I'm looking at it, going, we are all over it. All we want to do is look after our clients and apply the tax laws correctly, and we're getting bombarded with all this administration. So the approach I've taken for today is, one of my philosophies is, you might not like the answer, but if you know how the person made the decision of how they got there, you might be able to accept it. So that's why we're taking ourselves on this journey. So let's look at it. Where did TASA come from in the first place? Let's just go back right to the very beginning. So there's the bill that passed it in 2009. It's all up on the APH website and we're there to go. So prior to that, we've got the good old 36 Act, and it was introduced in 1943 about how tax agents, us intermediaries, as the ATO call us, get regulated. And then with TASA, they said the tax environment has changed. There's more and more people using tax agents. And this is the data from 2006 to 2007 that they used for the TASA introduction that said 74% of individuals and over 95% of businesses are using tax agents. That's sort of where we got to. And it was originally meant to come in 1999. So that's when we were meant to get TASA, but it took 10 years later. And we could do the joke that tax laws take a long time to come in to legislation in this country. But it was delayed at the request of us, the tax profession, that said, hey, whoa, don't bring it in now. We're dealing with this big beast called GST that was about to come in. And for those of you that are at my vintage and old enough, remember we had Y2K as well. We thought when the 99 was going to go to zero on the 31st of December, we thought the whole world was going to end and satellites were going to fall out of the sky with Y2K bug as well. So it was interesting. And the Treasury did a lot of consulting in this space. Treasury was progressing with this new regime from mid-2002. So what's the purpose of it? It's to ensure tax agent services, us intermediaries, what we provide to the public in accordance with appropriate standards and ethics. Okay, I'm happy with that. And then what does it do for us? It improves the regulatory environment for the provision of tax agent services for a fee or other reward by increasing the consistency in registration and providing appropriate but flexible regulation and greater certainty for agents. So what's the scope? In TASA to begin with, it established the Tax Practitioners Board, a statutory authority within the ATO. Okay, so they are still ATO employees. And it requires certain entities that provide tax agent services and BAS services to be registered, and it introduced this code of conduct. So why is it important to mention it? Because this is what everyone's up in arms about at the moment, this code of conduct that's coming over the top. Provides disciplinary sanctions so we can get our hands smacked by the TPB, and it replaces a lot of criminal codes for misconduct of agents and unregistered entities with civil penalties and injunctions. Okay, so then what happened? That's TASA came in 2009. So about 10 years later, there was the James Review, is what we colloquially call it, the independent review of the TPB. Now, before that, in 1994, there was another little look at the profession, but the James Review is the one that we always talk about. The final report was issued on the 31st of October 2019. And the major focus of that review by Keith James was the tax practitioner's regulatory regime, how it should actually be structured. And the three key issues were ethics, again, appropriate professional ethical standards. The TPB should be independent from the ATO, and whether the legislation is appropriately equips the TPB to perform its task. Has it got the rules to do its job, including sanctions and enhancing the ongoing registration requirements? There was 28 recommendations. The government's response supported 20 of them to some degree. And currently, with everything that's been put through as of today, 9 have been implemented, but we ended up with a few more amendments because of something that happened, which we won't talk about any further than that.
Oh, okay.
Yeah, I'm just going to say something happened, but we ended up with more than that. So now look at the result of the James Review. This bill, this omnibus bill came in. Now, we call it an omnibus bill because the way the Parliament puts bills in, they throw everything in together. Okay, so they throw everything in. So it can be a trade-off. So if you look at this TLAB bill, and this is where it's not just TPB changes, it's all other tax changes that come through. This is the bill that went through in November last year. And in that, if you read the explanatory memorandum and the guidance, what's come through with this bill is the changes based on the James Review, try and make the TPB independent from the ATO and separate financially. There was the disqualified entity provision that came through as well, which I won't talk about. It was the conversion because our annual renewal was 3 years and it's gone back down to 1. And there was an instrument that came through. It gave the ability for the minister to supplement the code of conduct. Okay, so
that's
was
the big one.
Yeah, and that was from the James Review. Okay, but this is the legislation that enabled what we'll talk about, the main thing we're talking about, that enabled the minister to put in, the assistant minister put in a legislative instrument. But there was other amendments that impacted us. Plus, just as a little side, the omnibus bill also had a few little tax changes, the off-market share buybacks and the capital raise funds. All right, so you can imagine there's a little bit of horse trading that can go on because with bills, it's got to pass both houses, the Green and the Red House, and the government doesn't have full control over both houses. It's the House of Review, the Senate. So there was a few other amendments that came through. So let's just look at what covered the James Review amendment, which is the legislative instrument. So the minister can supplement the existing code of conduct. So the minister has got the code of conduct and news subjects relating to professional and personal conduct of agents. That's what the scope of this legislative instrument is able to do. And that's the guidance in TASA. And it ensures appropriate consultation in key stakeholders and parliamentary oversight. Okay, so that's putting it into TASA. That is not talking about the instrument that went through recently. This is actually the legislation that says, okay, Assistant Minister, you're allowed to do this.
Yeah.
And the concerns yeah, sorry, Joyce. Yeah, go.
This was a recommendation since like ages ago, right?
Yeah. So
nothing to do with more recent, events by some bigger firms.
Yeah, exactly.
Yep.
And the concerns at this time, so the professional body's concerns at this time was, hang on, the code's principles-based, the code of conduct's principles-based. If you're adding prescriptive obligations, isn't that detracting for a principle-based approach? And are you duplicating it? Are you sort of trying to tell us how to suck eggs to some extent? So that was the concerns. But of course, this was just the mechanism to enable the instrument to come in. And I don't think it got much airplay, Joyce. We didn't hear much about it. We just went, yeah, we'll trust the
It's
system.
just before Christmas as well.
Exactly. And we all want to go on holidays, which is beautiful. Okay. But again, what we also got with this was a non-government amendment. And as I said, the other amendments came. And this is the breach reporting. We sometimes call this the dobbing the practitioner provision. So that was a start date, and it required registered agents and BAS agents to notify the TPB if they reasonably believe that a tax practitioner has committed a significant breach of the code of conduct. Okay, and the amendments lacked any protection. That's what the bit of legislation looked like. Now, you can't get any more information than this at this stage, Joyce, is what happened, because it isn't in the EM, because it's a non-government amendment.
Mm-hmm.
And it didn't get consulted on because it didn't have to. So if you look at the questions on notice, now I'm being a bit technical with the way the government works, but just trust me on this one. Questions on notice, the response from a question on notice about, hey, why wasn't this consulted on by the professional bodies? This is what the response was. Consistent with the consideration of other legislation through the parliamentary process, Treasury did not consult externally on the non-government parliamentary amendments made because they were non-government. Okay? So, what's our thoughts about? So, what happened now was that the TPB had to put out some information because we didn't have an EM that we usually look at it with new legislation to say, how do we get here? What's the essence? How is this going to apply? So the TPB puts out information sheets on the breach reporting. And as with any document that comes from a regulator, we need to know what we can rely on. With the ATO, we know what a tax ruling is for, a tax determination's for. We definitely know what a PCG is all about. That's the rules of engagement if we get audited. But we can rely, we can rely on those because they're binding on the ATO.
Mm-hmm.
These information sheets aren't binding on the TPB. It's a bit
Oh.
like web guidance.
Okay.
So it's a persuasive benefit that illustrates how the TPB are interpreting a particular facet of TASA, right? There's plenty of them out there. You can look them all up. But remember, it's just how they're going to go about it. So it's just the story. It's probably it's probably less than an EM. So the current version of the information sheet for the breach reporting has been subject to consultation, hasn't been finalised yet, but the consultation is closed. But it's important, I think, Joyce, to understand what we can rely on. We can't rely on it like a tax ruling or tax determination.
Yep. Is it kind of like a PCG?
Well, sort of, because the
Sort of,
PCG
yeah.
is the rules when we get audited.
Mm-hmm. Mm-hmm.
Right? But is this how the TPB is going to conduct their investigation on us? Well, yeah, you could probably say that, but it's not definitive the rules of engagement like an audit is. Oh, sorry, like a PCG is for an audit.
Yep. Understand.
So what does the breach reporting say? And this is just quickly, we'll just look at this. So the significant breaches of the code, we've got a self-report. It requires us to do it in writing, and we've got 30 days to do it.
So this is like reporting somebody else by a breach by another tax practitioner.
Yeah. So if you think someone who's a tax practitioner has had a significantly breaches the code of conduct, whether it's within your firm or external. So if I pick up a client and I look at someone's tax return and go, oh, that tax practitioner hasn't done the right thing, is it a significant breach or not?
Mm-hmm.
That's what we need to look at. And have I got reasonable grounds to determine that it is a significant breach? So that becomes subjective. And I've got to do that within 30 days.
Mm.
So the TPB has said instructions on this. It says it's a question of fact, and it will depend on the particular circumstances of a particular registered tax practitioner. So I'm going, when someone asks you a question, it depends. It's a bit of an it depends response, Joyce. We know that from what we've been working together. And these words about reasonable grounds of significant breach, we're relying on the dictionary definition. They're not defined terms. But the big issue for me, being pretty much a sole practitioner in a boutique practice, is I'm not in a big four firm or something where, say, you and I were working together and I dob you in. If you've done something wrong, I've got whistleblower protection. If I do it outside of my organisation, I don't have any whistleblower protection. So we can then open up to get sued and all those sort of things, Joyce.
Okay,
yeah, right. So if we were both working in the firm that we used to work in, if I dobbed in you, I've got whistleblower protection. But if I dob in someone else, external, I don't. So that's a big thing that is what as a concern is we've got with the breach reporting.
Understand.
So now we've got the expansion of the code, okay? The legislative instrument was issued on the 2nd of July. And it added 8 additional requirements into TASA. So the TLAB bill that went through, the omnibus bill that went through in November, enabled the minister to put this bit of legislation into Parliament, this instrument into Parliament. Now, normally with a bill, it's got to go through both houses and get royal assent. With the instrument, it goes in and it's law unless it gets disallowed. Okay? So it's that sort of thing. So the determination was issued by the Assistant Treasurer to supplement the code. The effective date was the 1st of August, although one of the provisions is backdated to the 1st of July, which is one of the really contentious ones as well. Now, because this all came in and it came very quickly, and you look at the timing, Joyce, the 2nd of July, we're going, we've just had end of year, we're getting ready for tax season, we're all getting a bit stressed at this stage. There was a big outcry with everything. And lots of letters, lots of media profile, lots of webinars, lots of a very, very strenuous discussion on it. So the minister then released a media release that says, okay, we'll give you some breathing space. I'm not doing anything about the determination, but I'll say if you're in an organisation of 100 employees or less, you've got till the 1st of July to implement these 8 additional requirements. If you're in a firm greater than 101 and above, you've got 1 January to implement it. But there was a little bit of a caveat on it that said, so long as they continue to take genuine steps towards compliance during this period. So you've got to work towards it. Okay, but it won't come into play until then. So let's just have a look before we even go any further. We're talking about a code of conduct. I'm a member of 2 professional bodies and I hold a practicing certificate because I've got my post-nominal. So a practicing certificate's required if you're a member of a professional body, you're a principal in practice, and you're providing accounting services to the public for a reward. So I'm governed by APES 110 and APES 320 anyway. So I've already got a code and I've already got to do a quality manual because that's my requirement. Now, even though the TASA code doesn't refer to APES 110, it's sort of loosely based on it.
Yep.
Right? It's pretty similar, Joyce, okay? So what the public practicing certificate does, it monitors for the quality control systems to ensure compliance with the code of ethics, professional standards, legal and regulatory requirements through the quality process and review programs. So any of the professional bodies can knock on any of our doors if we've got a PPC and say, where's your quality manual? What are you doing? Have you met all your CPD obligations? And do you have PI insurance? Yep. So these are all the things we're doing anyway. Now, I know that not everyone governed by TASA is a member of a professional body, but it's probably fitting. I don't know what the percentage is, Joyce, but it's fitting about right. So let's look at the 8 additional requirements. Uphold and promote the ethical standards of the tax profession. That's my code for no-brainer. I'm going, yeah, we're going to do that. The TPB said they're not going to troll our social media, which I'm rather glad about, but that's what it says. False and misleading statements. This is the one that's really causing us a bit of grief. Like, what is a false and misleading statement? And we're going to talk about that a little bit more. Conflicts of interest with dealing with the government and maintaining confidentiality in dealing with government details. I get with the government in dealings. I'm going, that's the big end of town. If you go and do a Treasury consultation, you better make sure you're doing those things. So if you get invited, make sure you know the rules. So I'm going to forget about that one because I don't get asked. Keeping proper client records, I'm going, we've got work papers, we do things, we probably document everything anyway. Anyone who's listened to me speak before have said, I love emailing myself. So I've got a time stamp to make sure it's contemporaneous. Or if I've had a phone call with a client, I go further to my phone call, let's just cover myself to make sure my client's clear. So I just think that's just good client practices. And it's no different to what we will normally do. Ensuring that we do things competently, I feel like that's pretty much what we do anyway. So I'm good with that. Quality manual, as I said before, if you're holding a PPC, you've got one anyway.
Yep.
So the only other one that I think is really contentious out of the 8 is keeping your clients informed of all relevant matters. So they're the 2 that we're really going to look at. What is the scope of this? What do they actually mean?
Yep. The second and the last one.
Yeah. So the question mark ones, because that's where I'm going, oh, hang on, what do we do? Like, we don't deliberately give false and misleading statements, but what's the corrective action? And then keeping your clients informed of all relevant matters, I'm going, oh, what's that actually mean?
Mm-hmm.
So there's more guidance coming through. The TPB have already issued 2 guidances, which cover the false and misleading statement, which we'll go through in more detail, and the conflict of interest one, which I said is only for, I think, the bigger end of town. So we'll leave it that one. So that's, they've been published. The second tranche of guidance, because remember, this has all happened really quickly. So the TPB's playing a bit of catch-up football as well, trying to bring out all this guidance. The second tranche is on the record keeping, the competence, the quality manual, and set your alarm bells. I really want to see what this one says. Informing your clients of relevant matters, because all we're getting is anecdotal stories. And I'll bring you up to speed with all the anecdotal stories, but we're still not sure how that's going to run. And then the final one is upholding the standards, which I think's pretty okay. So we've got some guidance now on the 2 more contentious ones that we're talking about, the 2 out of the 8 with the question mark that I had on the previous slide, the false and misleading statements, and then we're waiting on informing your clients of relevant matters. So if we look at what we've got, if I did a snapshot, I go, it's very broadly drafted legislation. And that's where, if we're hearing the noise on LinkedIn with all the lawyers and everything like that, they're going, whoa, what does this all mean? Okay, because if it's broadly drafted, do we make a interpretation that's narrowed or wide? Because if it's broadly drafted, it's sort of like everything's in. It's one size fits everyone. It's not narrow cast. But of course, they want to try and come up with anything that can potentially come about. The legislative instrument the purpose of that was so we can keep contemporaneous as things change in our profession. The minister can just put things in to cover things like AI and those sort of things. That's what it's designed for. And the minister said that these are only modest changes. But I'm going, you're making it more prescriptive, a code that's really principles-based. And because it's very broadly drafted, I'm not really sure that it's helpful.
Yeah.
So the signaling from the TPB is they're going to take a pragmatic and practical approach, and they're really big on no vexatious claims. In other words, you lost a client to a tax practitioner, let's dob them in. That is not what the what the TPB really want. But we're then relying on the TPB officer that's potentially auditing us to be a nice
Reasonable.
person. Yeah,
Yeah,
a nice
yep.
person with us, right? We've got to act reasonably. And I'm not that concerned with that, Joyce, for the very reason that when I look at the AAT decisions with the TPB and look at what's been put through the courts, a lot of them are people that are really stealing money, or the most recent one, Van Dyke, $1.8 million for an unregistered practitioner and didn't put tax returns in and everything like that. They're really at the extreme. So I'm hoping that that pragmatic practical is actually falling through. But again, if not, we've just got to wait for audit activity, don't we? We have no other choice and see how they're going to interpret it. They can say all they like, the TPB on these guidance statements, but how's it really going to get executed? Let's wait and see. So what is this false and misleading statement? So you can't make a false and misleading statement to the TPB, the tax office, or any government body. It extends all the way through to that. And it's whether you know or ought to have reasonably known that you're making a false or misleading statement. So knows is actual knowledge. Ought is a reasonable person in the same position. And they've stipulated in the determination that lying by omission is lying. Yeah, false and misleading statement by omission as well. But it's got to be material. Now, you could look at materiality and go to an accounting standard because a lot of us are accountants. Not very helpful. The TPB have said material is not trivial. What does that mean? Now, if we lodge a tax return, that tax return, each single number, each single tick we do, whatever we do, resident, spouse, spouse's income, you get my drift. Each one of those is a single statement. So it's not a full one. So it can cascade up as well. And I'm looking and going, well, we try and not do that anyway, don't we?
Try to get it right.
Well, yeah, you've got to get it right. But what happens if we realise something's wrong? We need to take reasonable steps to correct the statement as soon as possible after becoming aware. What does that mean? ASAP is one of those things like, well, we work well to date deadlines. We know that.
It's all relative.
Exactly. So in the guidance for this one, paragraph 37 says it depends on the circumstances. Don't we love that? When I ask my students a question, they go, it depends. And I go, great, they're getting it if it says it depends because they want more information. Extends to advising a client to take action. And we've got to notify the TPB or the ATO where the maker of the statement does not correct the statement within a reasonable time. So we've got to do that. What is a reasonable time? We're going to go through case study number 6 because I thought that was the most helpful case study that's in the guidance from the TPB. It says 5 days. But this case study is written in a way a bit like a lot of tax rulings and things like that. There's a tax ruling on residency and Harding's case where I read it and go, it's meant to be Harding's case, but it doesn't exactly follow the fact pattern. So let's have a look at 5 days. The TPB on all the webinars and comms that they've put out says more than 28 days is not reasonable. So at the moment, we've got 5 days to 28 days. I'm going, that still seems pretty short period of time, in my opinion, to correct something when we're busy. So what's our general thoughts on this one? Is it potentially a dob-in provision? Are we dobbing in our clients or not? And then you look at the other parts of the code and go, is there a conflict? Code 6, disclose information relating to a client's affairs to a third party without their permission. Oh, is that what we're doing if we're dobbing in a client?
Is it a legal duty?
Yeah,
is this
exactly.
a legal duty?
Unless it's legally required to do so. Yeah.
It's a code of conduct. It's not a legal thing, right?
Yeah. And then I'm looking at, well, hang on, they've said 5 to 28 days to do an amendment, if that's really what we're talking about, or dob in. But our tax system allows for amendments for honest mistakes, voluntary disclosures. We've got the 2 to 4 amendment period. So
2 to
how
4
does that fit
years.
together? And this is where I said at the top of the session, Joyce, I can't give answers. I'm just making people aware of, I'm not sure at the moment how this is all going to work. So it's a very much an awareness one. And that's why I had angst presenting it, because there's nothing definitive at the moment. And then I looked at this determination. We're looking at, do we then have to report a breach? So am I dobbing in my client and dobbing in you, for example, Joyce, if the client came from you, and then we've got issues because we don't work for the same practice, I'm not covered by whistleblowing protection. So there's a lot of careful consideration in all this, but it's ethics. We make ethical decisions, professional judgment every day.
Mm-hmm.
And then I came down to as well is fixing false misleading statements when we find them anyway, aren't we? I do. I had a client where he bought a house and it was COVID and I thought he was going to move into it and he didn't. He ended up renting it and I didn't pick it up. So I had to amend last year's return for it. And I'm going, well, even though I knew the client really well and I knew the house, I've gone, hang on, what triggered my conversation with the client was, where's your address? Isn't your address in the new house? And that's how you come about finding things. So of course you amend. So I think we're doing it anyway.
Yep. It's maybe the edge cases where the client doesn't want to amend, potentially.
Well, yeah, that's what the example is in the case study that we're going to go through.
Mm-hmm.
Okay, so this is the case study number 6 out of the guidance on the false and misleading statements that the TPB have put out. So let's have a look at how it all came about. So we've got Kate the agent and Peter the client, the income tax return for last year. Kate was reviewing the information from Peter and looked at the pre-fill report. That's what we do. Kate realises that Peter's previous income tax return that she prepared was wrong, incorrect. And of course, when you find it, it's always in the tax officer's favour. So you've got to fix it, right? It's never in the client's favour. It just seems to be the way that it works. An incorrect error, it's interesting how that works. But anyway, let's have a look. Kate advised Peter that he needed to either correct the incorrect statement or instruct Kate to do it or another agent to make the amendment. Now, this is how this case study is worded. In other words, I'm not sure whether I'd give my clients that sort of ultimatum. I think I'd couch the discussion a bit differently. But of course, this is just bullet point form. The other thing for this, now remember, this is the one that I spoke about a little bit earlier, that it was a 5-day to fix it. But I think one of the drivers for the 5 days was this bullet point in my interpretation. The 2-year time period for lodging the amendment was approaching, right? Which means then you can't amend. For any of you that's tried to amend a tax return out of time, you hit the button and computer says no, and it doesn't even go through. So then you would have to object, okay, to be able to, for the ATO to be able to receive that tax return. So the 2-year time limit was approaching. Kate advised Peter that if he did not take steps to correct the statement within 5 business days or instructed her to do so, Kate would be required to tell the ATO, dob in the client. Peter told Kate that he did not permit her to correct the ITR, the tax return, and terminated her engagement immediately. Mm-hmm. Kate has an obligation to take reasonable steps to notify the commissioner that the statement she prepared was incorrect in a material manner. Kate considers that in the circumstance, it is unlikely that Peter will correct the statement within a reasonable time. So this is correlation versus causation, Joyce. Did he leave because he didn't want it? We don't know. She's making the interpretation in this case study that he left because he didn't want it amended.
Yep.
All right. To ensure that she does not breach her obligation under the termination, Kate decides to notify the ATO about the incorrect statement of Peter's previous tax return. Kate satisfied the requirements under the false and misleading statement. Kate has not breached not disclosing any information to her client's affairs to a third party without the permission, unless legally required to do so, as she had a legal duty under Code 6. So she's got a legal duty to cough it up.
Okay.
Okay, so Kate has not breached you must lawfully act in the best interest of your client under Code 4 as well, because it's lawful. So this is causing us, this legislative interest is saying we've got a legal duty to do so.
Right.
So if Kate had decided not to notify the ATO, Kate's conduct would have been unlawful.
Mm-hmm.
So that's now I'm not a lawyer. I'm just interpreting and saying this is the view that the TPB are taking with it. So then Kate's got to make sure that she's not going to do a significant breach, which was the TLAB bill that came through in November. So it's going to overlay. If she's made a significant breach, she's got to basically dob in herself as well. Incorrect statement. But she then looked at the breach recording guidelines. You know, was it a significant breach or not? She decided not. So she didn't have to report herself under the breach reporting guidelines. That's as much information as we've got in this case study 6.
Okay.
So all the other ones in the case studies were quite I thought they were really obvious. This is the most controversial one. That's why I chose it.
Yeah.
Joyce.
It's a little bit unsatisfying.
Well, it is. So this is where I'm coming to. It's also subjective. Yes, hey, Michelle. This is where I'm looking at it now going, is it helpful, Joyce? Because remember, it's a code of conduct that I'm governed by my professional bodies as well as TASA. And I hear everyone say, I only have good clients. Great. All right. So you're not going to have a problem if you've only got good clients. So who has the bad clients?
No one.
A lot of people
they do their own tax returns.
Like we're in the Facebook groups, Joyce, and I know a lot of people online would be in the Facebook groups. And you've got your PITA clients, PITA clients and things like that. But you're going, well, you sort of like your clients. And when I do presentations and I ask the question of a lot of practitioners saying, do you need any more clients? How's your marketing going? Do you need? No one puts up their hand. Everyone has pretty much got their cohort of clients. So I'm going, well, I'm only going to keep my good clients, the clients I like, the clients I feel like I'm helping. So I'm not sure who has the bad clients. So where does the problem clients go? And this is my dilemma. And that's why I looked at the beginning, Joyce, with the TASA. What's the purpose of TASA? And why are we in this regime in the first place? Is if you've got a recalcitrant client, where do they go if they drop you, like in this example? Do they go to a non-code complying agent? That's not good. Or do they do the tax returns themselves? Is that better or worse? I'm just not sure where we're trying to get to with these more stricter requirements, because we're trying to be trustworthy, uphold the tax laws and do all that sort of thing. So I'm just a bit concerned with the clients that drop off the perch. You know, do they then stop lodging tax returns? And that's a worse position. So I don't know. That's just me contemplating the outcome of that case study.
Just one quick question. Are tax agents obligated to report past returns where there's a false or misleading statement?
Well, this is where it's coming down to. If it's significant, yeah. If it's material. And material means non-trivial.
Yeah, so and it could apply for past returns.
Well, it
could have been lodged.
Once you observe them, that's the way the rules work. Remember, that was a 2-year return. So that was a past return in that case study 6, Joyce. It was a previous return. So Kate's doing it for Peter or whoever it was, and it was a past return that she did. So is that different to a past return that someone else did? Do you only look at the carry forward numbers? Do you only look at Div 7A loan exposure and things like that?
Yep.
All right. And then whose responsibility is it? Because you just can't change that number or fix it. You've got to do that whole return again. And that's what I do. If I find something, I actually have to do the whole return again. You can't just fix that, but that one false statement that's wrong, because you're then vouching that the whole tax return is true and correct. But then where does it leave you if you're going to use something like, say, a Div 7A exposure, because we know we see a lot of those that are done incorrectly. Do you then need to go back for all the open returns and fix them up? I do. But is that...
So the
That's
TPB doesn't provide guidance in terms of whose responsibility it is to fix it. Is that correct? So it's more like if there's a false or misleading statement, you have to dob in the client
if
or
it's material.
someone.
If it's material.
Yep.
Yeah.
Yep. But it doesn't
So
say whose responsibility it is to fix it, right? It's
no.
like
Well, it's
you work it out yourselves.
but the case study 6 says if they leave and you know they've left, you then assume that they've left you because they don't want it fixed. And
But
I'm
that
not
might
sure
not
whether
be
you can
necessarily
definitely
true.
correct. I'm not sure whether you can make that was the
Yep.
correlation versus causation comment that I made. So again, I'm finding it hard to give definitive answers, Joyce, and that's why I had the angst doing this for you.
Yeah. Oh, good. Yeah.
Because it's just an awareness thing. So I thought what I'd do is just give a couple of examples. Have we got time? A couple of examples of false and misleading statements that you might not even realize you're making. Because I don't think we deliberately do it. So think about your TPB annual declarations. This was a recent webinar that TPB put out and said there's over 3,800 tax practitioners that have outstanding lodgements, and 2,600 of those aren't on a payment plan. And we tick a box when we do our annual declaration with the TPB saying we've got all our tax affairs in. So I'm a bit worried about that one. I'd be checking that you've got all your tax affairs in place. And then the other one that came to light with what about client onboarding with or without client agent linking? This is what we tick when we onboard a client, whether there's client agent linking or not. I confirm that I have written authority from this client to act on their behalf. Because remember, engagement letters is just a good to have. They're not mandatory. Just check you've got that. So if you do your back fence neighbour as a favour and you tick that, I'm going, is that a false or misleading statement? And then when you change all the addresses when you onboard a client saying, yeah, I want everything to come to me because you look after your clients very well because you only have good clients, think about what you're declaring. Just like when you get an app on your phone and you just say, accept all the T's and C's, might be a good idea to read them. So just double check that, because I thought that was interesting. Even with client agent linking, we still have to do a proof of identity check. And we have to confirm that we've got written authority to do it. Signed authority. Signed authority. Is an email enough? Is that signed? Just an interesting thing. Then it's a lot harder to get deferrals and GIC remission now. If we basically tell the tax office that my client's had a terminal illness and it's been a miraculous recovery, so we can get a deferral request or a GIC remitted, I'd be watching what you actually write in those boxes now, because remember, that could be a false and misleading statement.
But it's always had to be truthful anyway.
Absolutely, but sometimes we're bending the truth a little bit, Joyce. So I just thought I'd throw that one in. To make it a little bit more fun. So keeping your clients informed of all relevant matters.
But just letting you know we've got about 10 minutes left.
Yeah. So keeping your client informed of all relevant matters. Tax practitioners advise on all prospective and current clients of the following. Any matters that could significantly influence the decision of an existing or prospective client to engage the individual tax practitioner or tax practitioner's firm to provide a tax agent service. Any matters. The maintenance of a register of tax practitioners by the TPB, which can be accessed and searched. Good luck with that. It's not the greatest search engine they have. How a current or prospective client can make a complaint about us to the TPB. The matters that can be reported include, but not limited to, board investigations, board imposed sanctions, conditions applying to registration, the use of disqualified entities, and any conviction for tax offences and offences relating to fraud or dishonesty. If that statement, but not limited to, came out, and that was a finite list, I'm going, that's probably about right. But we've got not limited to, and we've got any matter. What is any matter?
Anything.
Well, that's how it's drafted, very broadly drafted.
Had a bad day. Anything. I have to report that.
Yeah, advice must be given in writing in a prominent, clear and unambiguous way. The registered agent would satisfy this requirement if the agent published information on a public access website or put it in your engagement letter. That's what I did. I just put it into my engagement letters. Now, this section is backdated to apply from the 1st of July 2022. And for matters that arose after that, to publish the matter, and it needs to be made on the needs to be made by the 29th of October. So you've then got to overlay that on top of the new announcement that says if you're in a firm under 100, we've got 100 employees, you've got till the 1st of July next year to do it. Okay, so this is one that is causing us a little bit of angst because it's very broad. So the assistant treasurer said, who said there were only modest changes, he said this in a quoted article. While there has been some commentary on what accountants will need to disclose under the new code, tax practitioners will not have to disclose their mental health history, religious affiliation, or sexual orientation, or what football team they barrack for, which was a bit
good to know.
Went through. Okay. So the way that I've interpreted this is what I do anyway. Sole practitioner, I cannot do all my tax returns in May with a 15 May lodgement. I go to my clients, if you don't give me your stuff by the 1st of May, I'm not going to be able to meet my deadline. Right? So I've told them, I think that's reasonable. Or if all of a sudden, you know, I have to have my appendix out or something like that, and I'm going to be in hospital for 2 weeks, I'll go, oh, sorry. Right? I'm sorry. You know, I'm going to be out of action for 2 weeks, right?
Yep.
And get someone to do that. So that's the way I've interpreted it. But again, there is a lot of discussion about what that any means and not limited to means. So that's the broad definition, Joyce, that has caused us a bit of angst, right? The new obligations are modest. They will require accountants to do things like disclose prior convictions of tax offences, ensure services are provided competently, and manage conflicts of interest. Okay. But again, that's not what the determination says.
It's pretty broad. Yeah.
So this determination, I thought I'd be a bit nerdy and throw up exactly what the disallowance is. So this, when something goes in as a legislative instrument, you've got 15 sitting days for any of the houses, either the lower house or the upper house, to say, I want a disallowance motion. So the disallowance motion for this has been brought by Senator Smith, and we're waiting till the 10th of September, which is when the disallowance motion comes through, and it's going through in the Senate. Okay. So we're just going to wait and see.
Oh, so all this, the whole legislative instrument might not be effective anymore, will be disallowed. Oh, okay.
All right, so we're waiting. So I'm not getting into the politics of it. I'm not getting into anything like that. I'm just saying, look at the numbers in the Senate, work out which crossbenching Senate need to vote for it and see what happens. But so we're waiting for the 10th of September. Otherwise, it will be disallowed and the legislative instrument will have to then be redrafted and come back in, which means it might get more consultation, Joy. So it might be a better one, but not crystal ball gazing. So what does it all mean? I've got about 5 minutes to go. So this is me having a little bit of a look at, well, we can't police everyone, right? The TPB, the ATO do not police everyone. So let's look at the stats. What's the cohort we're in? This is the 2023 annual report. That's the most recent data I've got. Registered ages around about 70,000. You can see the split up. Now, the most recent TPB webinar, the platform exploded with 5,000. So it's still not a huge, it's a huge number, but not a huge amount of tax agents and BAS agents if we add them all together. How many people work at the TPB? 140. Okay. They have got more funding. So I'm waiting for the 2024 report. There is more people, but even if it's doubled, I'm going, okay. So how do they do it? What's the role of the TPB? They do a lot of our registrations. now that they're going to be financially independent, they'll be getting their money from our fees. So they need to get the money in as well as do their job of policing us and the unregistered agents, because we all jump up and down and go, can you please get this person that's unregistered and held themselves out? Mr. Van Dyke was doing unregistered returns for 22 years, Joyce. 22 years.
Mm-hmm.
And then how does the ATO do it? The ATO, we've got that many taxpayers out there. The ATO's got a lot more people, but they still can't police all of us.
So they pick the bad apples, the really bad apples.
A lot, well, they do from data matching and things like that, but they also nudge us. And this is the term that they do. And the TPB and the ATO use the word as well, they nudge us. How do they nudge us? Think about the pre-fill report. When you get a pre-fill report and you've got an occupation code for a client and the taxpayer says, your deductions are higher than other people, that's a nudge. It's saying, let's review it. At tax time, ATO personnel come out and go, watch for rental deductions, watch for this, watch for that. All the things we talked about in our MyOb tax session that we did, Joyce, you and I together. Those sort of things, that's the ATO going and looking for it. In the pre-fill, crypto, your client's got crypto. Oh, your client sold their main residence. Do they have tax? This is all nudges. It's saying, we're making you aware of it. Do you need to deal with it? And this nudging is a technique used by regulators. There's nudge theory. There's my copy of the book. I know it's a very bad photo. I'm not a photographer, but that's a copy of the nudge book that I've got on my bookshelf from way back when, one of the first editions, because it was quite interesting. So what's nudging do? It proposes adaptive design or decision environments, as well as influencing the behavior and decisions for groups and individuals. So the option to nudging to achieve compliance would be education, legislation, or enforcement. And that's where I looked at, they're trying to get us to do things. So all of us have been talking about this legislative instrument, Joyce, haven't we? It's got a lot of airplay. So does that mean more people are now aware about the code of conduct? So
for sure.
So I'm just thinking that maybe even if the determination gets withdrawn, we're more aware of the code of conduct. We're more aware that we need a quality manual. We're more aware that we've got to fix misstatements. So is that nudging? And they've got us by nudging anyway.
Yep.
Because clients say to me, oh, Lisa, you know, when I'm doing training, Joyce, they go, oh, I've always claimed it this way. And I said, yeah, but it's not quite right. It just means you haven't been caught yet. It's the good old speeding fine. So the way that I look at it, it's like, do I speed? Yes, I do. Do I get caught every time? No, but if I see a speed camera, I'll brake because I'm not sure exactly what speed I'm doing. Am I going to dob myself in? No. But if I drink drive, I think that's a lot worse, right? So it's on that paradigm of where it all fits. So as we close, let's have a look at this one. And this is one of the funnest bits of nudge theory that we talk about. So this is a urinal at Schiphol Airport in Amsterdam. And they had a lot of trouble with cleaning, okay, of the urinal. And if you look very closely in that urinal, don't look too close. It is a photograph. You can see a little dot. That is a fly. And so what they did was they put a fly in there to help with the aiming of this, and it reduced the cleaning cost by 20%. This is the funnest example of nudge theory that I've heard, and it's in the book, and I always have a bit of a smile about that, okay, because it's something we can really appreciate. So it's controlling how people work, right? And that's what we look at. So just before we finish, we've nearly got there on time as well, Josh, which is great. What are the actual remedies? What's the sanctions that the TPB can impose? A written caution, an order to do some education. They can suspend or they can terminate. Now, make sure that we know how it works is that suspension means like suspending your driver's license. You don't need to go back to court to get it. If you cancel your driver's license, just like you cancel your TAN, then you've got to reapply. So termination does not mean you can automatically get it on reapplication. You then have to satisfy the fit and proper person test. So that's what can happen. Now, when you talk to the TPB, they do a lot of education orders, and we see a lot of education orders if we scan the TPB register, or know which ones are civil penalties, which is more like what the unregistered agent Van Dyke did. Mm-hmm. So in summary, what are we going to do? Everyone should be at least aware of the code of conduct now. I think that's definitely worked. There's been a lot of discussion. Take an environmental scan in your practice. Do a bit of a health check and see, are you doing the right things? Look within the scope. Take a pragmatic approach at this stage because we don't even know whether the determination is going to go through. If you're concerned about some things, just look at what all the information is out there. There'll be guidance on what you have to disclose to your clients. Are you doing everything you should be doing? That's all. If you didn't have a quality manual, and you are a CPA, IPA, CA, you should have one anyway, and you've probably ticked a box saying you've got one. And then do you document everything? Make sure you've got everything documented, or you're doing so now. Make sure you've got work papers, all those sort of things. It's just a bit of a hygiene check, Joyce, is what I look at the moment, and keep doing it. And if all else fails, at least we've got our triennium CPD hours on ethics, right? Because that was the hard one to get, right? Mm-hmm. Our ethics hours is that we're good for our things. So at least we can tick off the ethics. So that's sort of where I'd like to close it off, Joyce.
Amazing. We'll open up for Q&A very shortly, but just those that are new to us, if you found the session useful, you're welcome to start a free trial with us. Go to taxnuggetsacademy.com.au. We also have team subscriptions if you're interested in us for your staff. And we've got another free live event coming up for next month, which is our comprehensive monthly tax update, which is on the 16th of September. Link is in the chat for you to sign up for that one if you're interested. All right, we have a few questions, Lisa. Are you okay to stay maybe for another 10 minutes or so?
Mm-hmm. I'll try and answer them, but I'm trying to be very agnostic because we don't know. So
yeah, it's hard to be definitive.
Absolutely, absolutely.
On the 10th of September, it might not even exist anymore. Like it might be disallowed.
We still have the code, Joyce. I still think we have the code.
Yeah.
So it then means, are we going to implement things that are more pragmatic or not? It comes down to it. We should be doing a lot of these things.
All right, just a couple of questions. So first of all, from Sue, does this mean, with the false and misleading statement one, does this mean we have, as tax agents, have to go back and check historical records? No. Yeah, no. It's just when you are made aware that there is a false or misleading statement, but you don't actually have to go historically and actually look for mistakes.
We're not auditing. We are not auditing.
Yeah.
Okay, so I look at it and go, I think I used the Div 7A example because you can see that, right? And I can see if the Div 7A, so if it's Div 7A, I'm going, well, how was it treated the previous year? How does it treat? Do you have a loan agreement? What do you do then? That's my decision of how I look at it.
So we've got Simon here asking about that. Pretty much, yeah, the Div 7A example and dobbing in obligations, we've seen errors in the past. And a lot of it is client omission, not really the prior agent's issue. And typically it's the client that is unable or unwilling to deal with the issue. And the question, I guess, is what do we do, right? Where is the line, in reporting the client or the agent?
Right, Joyce, it's all to do with your risk. Like I'm not hunting. I'm not going to open up every single 2-year, 4-year return for a client. I mean, that's not what I do. I'm not auditing. I'm not doing the ATO's job for them. I feel like we do that anyway to some extent. But what we're doing is going, okay, once we've got that return, what numbers are carrying forward? And I think we do, for my practice, I look and go, if there's a carry forward amount, I need to know how it was treated the prior year for this year. Like think about it. Do you have the depreciation reports on file? Do you have, the quantity surveyor's reports on file? Do you have a copy of the trust deed? Do you have a copy of, what else have we got? The Div 7A loan agreement, complying loan agreement, all those sort of things. What I don't want people to do is jump the gun and start pointing fingers, because you don't really know what the discussion has been in the past as well if it's a new client.
Yep.
So
Yep.
again, take a nice pragmatic approach, and we're not auditors, and we're not going back and we do not have a responsibility to go back and redo every single tax return that's open. That's not what we do.
Yep. Yep. I also feel that, if you know something smells funny, it doesn't necessarily mean you have all the facts to know that it is 100% a false or misleading statement. Like, that's a very hard conclusion to draw if you're not actually 100% across the whole historical issue.
Yeah, and that's exactly how I feel, Joyce. That's when the lawyers are going to get involved, because the lawyers are talking about this because they're the ones that are interpreting it in that way. Right? But remember, the lawyers aren't governed by TASA as well. Yep. They're allowed to throw grenades without crime, right? Because they can, unless they're holding both, which they could be. Right. So that's where it comes down to, like, how broad it is. And when I look at it, are we just doing what we do anyway?
Yep. We have just launched a ratings poll, so please let us know what you thought of today's session and leave a comment or suggestion for next time as well. I'm going to take one last question, and it's a tough one. Oh, they're all tough questions, Lisa. So good on you for.
You know what this is like. This is a very hard one to get our head around, because it's very emotive, because it's our business. They're trying to tell us how to do our business.
Yes. What are your thoughts on, the materiality threshold of significant, right? Is it the impact on the tax result, and then also Simon's asked, is any omission a breach of law?
Yeah, omission, they've got you on as well.
Yep.
What do I say sometimes? I say, if I kill someone, they better find the body. But if the ATO accused me of having $1 million worth of crypto, I've got to prove I haven't got it. So lying by omission is definitely written into the legislation. What is material? The official line we've got is not trivial. What does that mean? So it's not materiality as for the accounting standards. And the example in case study 6 was which way does it go? Is it in my favour? So is it the taxpayer's favour, or is it in the tax officer's favour as well? Does that have a bearing on what's material or not? The HO is going to go, well, if it's in my favour, anything's material, it's not trivial. But if it's the other way around, I'm going, I'm going to do the correction. I can't give an answer. And I don't know what it is. I'm hoping we're going to get more guidance on it.
Yeah, so there's no guidance?
Down to it, yeah.
No guidance yet from the TPB on the materiality aspect?
They're just saying it's not trivial.
Okay,
and I don't think that's helpful either, because I think we need to know. And even in that 6 days, 5 days to 28-day frame, what was pushing that case study was that the 2-year amendment period was about to close.
Yep.
So it was that the deadline that they were aiming to. If all of a sudden you do someone's tax return, you lodge it and go, oh, damn, I've forgotten something, or their pre-fills, you've done it too early and the pre-fill's been updated and you've missed something, and then you go to the client and say, did you forget about that bank account that was closed that had $10 in it? I'm going, well, that's immaterial, isn't it? But other things might be different. If they've sold a house, I'm going, yeah, but where is that bread box? How big is that bread box, Joyce? And that's the hard thing we've got. And that's the difficulty it is, until we get more definitive guidance or we see audit activity.
Yep. All right. That's the last question that we'll take.
No, sorry about that.
No.
But I'm sort of thinking this determination is very much around how we run our business. It's not about the tax laws as such. So I parallel it to going and grabbing my coffee. It's like you go and grab your coffee and you go, well, if it tastes no good, here's the consumer protection, ACCC you've got to go and talk to. If they say cash only, I'm going to dob them into the ATO. Here's the ATO sign that I'm going to do if it's cash only. If you get poisoned and have food poisoning from eating, a croissant or something at the coffee shop, do they actually tell you, here's the Department of Health number? So it's taking it to that level. And I think that's where we've got a lot of angst as well. Are they trying to tell us how to run our business, where they really should be looking at how we apply the tax laws?
Any final words? Or is that your final one already?
We've
Key
covered
takeaway.
look, I think the big thing is be alert, not alarmed, is the way that I'm feeling about it all. I feel that most of us practitioners out there, and I do speak to a lot of us, are all doing the right thing. Right. So all we're doing, I think what we could probably improve on if you looked at it is probably just a little bit more documentation, especially if you're a little sole practitioner, you're probably not documenting everything you should be. So just do a little bit more. And that's what I would suggest. And that's good for PI insurance and all that sort of stuff with claims. So that's what I suggest. Be alert, not alarmed, Joyce.
Amazing. Thank you so much, Lisa, for those insights and giving your take on all this uncertainty. I know it's a tough one, so good on you for showing up today. Thank you.
Yeah,
and thank you, everybody, for joining us. That's all the time we have left. Hopefully you got something out of it. Be alert, not alarmed. Thank you, everybody. Cheers. We'll see you next time.
Thanks, everyone.